Should I start a limited company? Your questions answered by Avar team. All businesses, no matter the size, must have a legal structure. There are a few different options. This video focuses on two types, limited company and sole trader. The structure you choose will depend on your individual circumstances, and there are advantages and disadvantages to both options. Let's start with a sole trader. A sole trader is a self-employed individual who is the sole proprietor of the business. One of the main advantages of being a sole trader is that it is easy to set up, and there is reduced administration and paperwork required. There are not many filing requirements when compared to other business structures. Income only needs to be declared on an individual's self-assessment return. This means that there is more privacy as this is not on public records. All profits are, however, subject to tax on the individual in the tax year that they are earned. Income tax may be payable at 20%, 40% or 45%, depending on the individual's tax band. There is also a compulsory Class 4 national insurance contribution of 6% on profits after deducting the tax-free personal allowance. If earnings are low, there will also be a Class 2 NI contribution to consider to protect your state pension. A sole trader has to make two payments of tax and national insurance, once at the end of January and once at the end of July. This means that the owner cannot build up reserves in the business, as all income is taxed when earned. One of the major disadvantages of operating as a sole trader is that it carries unlimited liability, which means that if the business goes into debt, the individual, and the individual's estate if relevant, is liable. This could mean the potential loss of one's home or other valuable assets. It can also be difficult to raise additional finance as a sole trader. The sole trader cannot sell the business to investors without first changing structure. Although it is easier to change the legal structure later if required, it is also easier to wind up the business when desired. A limited company, however, is a separate legal entity that is separate from the shareholders and directors. The word limited infers that the owners of the business have limited liability for the company's debts. This is limited to the amount of capital that they have invested in the business. Limited liability means the shareholders and directors' personal assets are not exposed in the event of bankruptcy and legal challenges, unless they are indebted to the company. There are no payments on account upfront for tax, unlike for sole traders, meaning there is reduced cash flow burden. Generally, a limited company is a more tax-efficient structure as there is scope for tax planning to give the optimum level of income to shareholders and directors, whilst having options to minimize the tax liability. Corporation tax tends to be charged at a lower rate than income tax of up to 45%, depending on the individual's tax band. There are more allowances and tax-deductible expenses available to limited companies over sole traders, meaning that this could be a more profitable route. Setting up a limited company also gives name protection, meaning that no one else can use the name. This can become very important if the business has invested time and money developing its own brand and identity. A limited company can be created before a trade even commences. It is easier to raise finance and gain investment in a limited company when comparing to sole traders. There are some responsibilities of running a limited company placed on the directors. The directors have a fiduciary duty to represent shareholders and to act in the best interest of the company. There are more filing requirements, an annual confirmation statement, corporation tax returns, accounts to Companies House and accounts to HM Revenue and Customs. These come with various penalties, fines and interest for non-filing, late filing and late payments. Accounting fees are generally higher for limited companies. The business, its officers and certain financial information will be searchable on public records such as Companies House. The ideal solution will depend on your individual circumstances. Call Avar today and we will guide you to the most profitable solution for you.